Hello, everyone, and welcome to What the Finance, making finance easy for everyone. Today, we're very lucky to have Dr. Simon Barnes on for our second podcast. Dr. Barnes has had a 20-year career in venture capital, but before that, he actually studied at Cambridge University in plant molecular biology, both an undergraduate and a PhD. After that, he was a NATO Research Fellow and worked at the Rockefeller University in New York. Simon then pivoted careers into the business world, studying an MBA at Imperial College London and then started his career at Atlas Ventures. He then became a director of the Entrepreneurship Center at Imperial College and co-authored the book Raising Venture Capital in 2006. He has since run his own venture capital firm called Circadia Ventures and has since raised over £55 million to invest in health, life science, and therapeutic businesses. He's also currently a director at Evolve Biosystems, Changing Health, and Prolipin GmbH, which I probably butchered. I hope you all enjoy the conversation. And if you want to see other speakers similar to Dr. Barnes, please like, subscribe, show your support, and I hope you enjoy. Hello, everyone, and welcome to What the Finance, making finance easy for everyone. Today, we're very privileged to have Simon Barnes on. So, Simon, thank you very much for joining us.
It's a pleasure.
Perfect. So, my first question is, so before pivoting careers, you had invested almost 10 years into sort of academia and research. Was there a precise moment that you knew you wanted to go into business and venture capital?
Yeah, it's a good question. I had been a research scientist, as you mentioned, and at a certain point, I became fascinated by how do you turn all this science into a business. I mean, I started to think about what's the point of doing this. You know, how can we make this real? How can we turn it into something that's a real product? And I began looking into, the biotechnology industry and what it was. And to be honest with you, one day I went to a kind of a lunchtime talk by a venture capital fund. And, they talked about this thing called venture capital, which was all about backing startup companies in the field of, or in that instance, the field of biotechnology. And I became absolutely gripped by it. So that's the moment where I thought, that's what I'm going to do. To be honest, without having much of an insight into what it actually meant. So it all sounded great, but I didn't really understand the business. And I took myself off and did an MBA to learn about business. And that was my sort of transition point from being a pure, academic scientist with something of an interest in business to actually doing something about it. So that was the moment, Anthony, and yeah, it's a long time ago now.
Yeah, I can imagine. And it was a good time as well, because it would have been sort of just as the internet boom or internet bubble was happening. So was that sort of another surgence of venture capital?
It was it was when I made that decision, it was 1995.
Okay.
And so the internet was very much in its infancy. I think I'd had my first email account for a couple of years. That was all to come. I returned to London because I'd been living overseas, and returned to London to do my MBA. And during the course of that year, it was 1997, really started to explore what exactly it was I would do within this venture capital world. And you're right. I mean, I sort of joined that industry. I joined a venture capital firm called Atlas Venture, which is a very well-known firm, and it was in the States, it was in London, it was, offices across Europe. And I joined that just as we really entered the boom of internet startups in Europe. So it was a real baptism of fire from sort of 1998 onwards.
Yeah, perfect. And then for people looking to get into venture capital, would you recommend them doing an MBA as well? Do you think that's sort of a requisite? Or
I think it depends on your background. I mean, I think for me, I'd been a scientist, and I'll be honest, I mean, didn't really know very much about business. So for me, it was a complete opportunity to transition into a whole new world. I think if you're working in business already, I'm not necessarily sure you need an MBA to go into venture capital. I think actually a lot of the time people ask me, how do I get a job in venture capital? And what I always say to them is, look, I think VCs look for a special skill? What is it you bring? And for me, what I brought was a very strong technical, scientific background. So very much part of the team, looking at the science, the technology, understanding if this thing was likely to work or not. And I think goes for the same advice now. I mean, think about what your special skill is, your special background, your special piece of knowledge. What is it that you bring to the party that you think would add to a venture capital firm? And I think more than anything, I think the important thing is deal flow. Venture capital funds absolutely need great deal flow. They need to find good opportunities. So if you spend some time just thinking about building your own personal deal flow in your field of expertise, your field of interest, if you're into a particular technology or subsector, get into networks on that and start identifying what you believe would be good early stage investment opportunities. And I think if you're going for an interview at a venture capital firm, that would be a really good card to pull out. Look, I've got 3 or 4 potential deals that I think could be of interest. Let me walk you through them, and that would be probably the most tangible advice I could give at this time.
Yeah, perfect. Thank you. And then for people who are maybe looking to change careers or change industries, what advice would you give them?
To change careers and change industries, again, it sort of depends what you're changing from.
Yeah.
And to I think it's the same advice. I mean, certainly if you're looking to move into venture capital, go with deal flow, because deal flow is the lifeblood of a venture capital fund. Without really interesting things to invest in, they have very little. So if you can take that, then it's a really strong characteristic that you can bring. The other thing, of course, is experience, operational experience. And I've often said to people, well, maybe you should go and work for a startup, because actually, if you go and work for a startup and experience all the operational issues of building a company, and especially if it becomes a successful startup, then it's great experience to have and to take forward. So I think operational experience and having lived the challenges that entrepreneurs face in building companies is also a great thing to do.
Yeah, perfect. Thank you. Now, this might be a little bit cheating, because for the listeners, we have a group assignment due soon to do with actually creating a pitch. So what was the best pitch you have heard, and why?
Well, it's hard to pin down one particular pitch. But if we're talking about student pitches at Warwick Business School, for instance, the ones that really hit home are the ones that you really believe they're going to do it. And so I've said a number of times, credibility is key, and to be able to convince the listener that this is something that you really could do, that's very impactful. And I think if you talk to most VCs, what they're going to say is, look, we're looking for energy and vision here. So really selling the idea with energy and passion is a really big advantage. So regardless of the business opportunity, I think you can sell something with energy and passion and have the credibility that I really could back this team. Then those are the key ingredients that you need to get across.
Yeah, I think one thing I've learned from listening to you as well in the seminars is, not just having a plan to exit and trying to make as much money as possible. It's actually having a passion for the.
I think that's what it is. Well. At the end of the day, through thick and thin, and there will be really challenging times on any entrepreneurial journey, if you have the passion and the belief to get this thing over the line, then the returns will come. I think if it's all led by look, in 5 years we'll exit at this price, it's a little bit less easy to believe that.
Yeah, definitely. So a bit more onto your actual fund yourself, your venture capital venture.
Sure.
So if you were sort of if you did identified a company that you were interested in investing in, but they had a few other offers, why would they choose Circadia Ventures rather than a competitor?
I think at the end of the day, it comes down to what more do you bring to the deal and than the money. And you know, it is often the case that, you know, if it's a very promising startup, you know, may have multiple offers, term sheets on the table. I think it comes down to a little bit of personal chemistry, and what more does the investor bring. So, you know, we will always say things like, well, you know, we've got a great network and look at our track record, and you know, so on and so forth. And to be honest, we'll also suggest that they talk to some of the CEOs that we've backed previously. You know, so, you know, our existing portfolio companies give us a good reference. You know, they'll say, well, they're good to work with, or maybe you should watch out for these issues, or whatever they say. But we'll put you know, entrepreneurs in touch with a couple of CEOs that we've already backed, maybe on the board of their companies, and then it's a question of the personal chemistry. How long, you know, how do we get along? And, you know, coming back to this issue that there are going to be challenges along the way, you know, the entrepreneurial road is often a very bumpy one, and getting along helps. It really helps in solving those problems. And, you know, early in my career, a very senior partner in the fund said, look, you know, if you don't want to have dinner with someone, you probably shouldn't back them. And I thought that was sort of a bit flippant at the time, but I think there's some truth in it, that, you know, you've really got to have a mutual respect. I'm not suggesting you become best friends, because of course there will be problems in the future, and your views may be different, your interests may be different, but you certainly have to have a mutual respect and a good chemistry. And I think that is often the point, the tipping point for getting a term sheet accepted in the face of competition.
Yeah, perfect. And then I was going to ask as well, what piece of advice, what was the best piece of advice you've been given? Would you say that was the best piece of advice?
It was one of them. You know, I think it was that. Plus, also, you know, whenever you're negotiating a deal, you know, never get personal, and never, you know, never get angry, never get personal, and don't cross the sort of imaginary line, because in negotiating these deals, once you have negotiated it and the deal is done, you know, that's not the end of the story. You know, it's the beginning of the story, because then you are on the board of someone's company, working together for the next 5 to 7 years, hopefully helping to build a great company. And so, you know, never cross that line when negotiating an investment in a company, because that's your future business partner who's selling some of their company to your fund. And so you're going to have to get along. And that's, I think, a really important point.
Yeah, perfect. Thank you. So next question, when analyzing a company, are there any instinctive cues you look for? Or is it mostly just systematic, or is it linked to that, you know, to the founders as well, and just getting along with them? Or is there any other instinctive cues?
Well, you know, if you talk to most investors in the venture capital industry, they'll say, well, you know, there are a couple of really important things, you know, big market, potentially global market, a strong team, or at least the beginnings of a strong team, someone that you can build around. We look for how a company builds value. What is it that they have that's unique and important, and could either be a threat to a global corporation or be needed by a global corporation? That's where the value lies. And what is their pathway to delivering that? Have they thought it through? Do they understand that at some point there'll be an exit event where ownership of the company will change? And so, you know, wrapping that all up together, you know, it comes down to a question of, is this a backable team? And backable is a very broad and nebulous word, but it encapsulates all of what I just said. Is this a team that gets it, that gets what mission we're on, to build a great company and ultimately deliver a good exit back to investors? So I think when you're looking at a company, I mean, I often say to the MBA class, you know, it really encapsulates everything you've done on your MBA, because it comes down to this, making this decision with very imperfect information. You'll never have all the information required to make the perfect investment decision. At a certain moment, you've got to leap. You've got to take the leap into the not quite the dark, but you've got to leap into this venture and back it, and then you go from there. And regardless of how much due diligence you've done, you will always find out more in the first 5 minutes of the first board meeting than you did in the several months of due diligence, because you really see how the team interacts, what challenges they face, and how they go about solving them. And, you know, occasionally you have an unpleasant surprise in that first board meeting. You know, turns out that clearly there's, you know, bad personal chemistry between the two members of the senior management team, and that wasn't obvious before. So, you know, you can do lots and lots of due diligence, but in the end, you're going to learn a lot more in the first few hours, the first few weeks of being an investor in the company.
Yeah, I think that's one thing I've learned with more studying business or just
Yeah.
practical aspects. It's not black and white. There's so much in between, and you have to be comfortable with that, I think, as well.
Yeah.
That you won't know everything. Okay, so my next question is, I'm sure you've probably made a few mistakes in your 20-year career. So are there any that really stand out, any mistakes that you learned from maybe?
Well, let me think. You know, of course, there are many mistakes. Mistakes can come in two forms, right? Mistakes where you invested in a company that turned out to be a failure, and there have been a couple of those. And there are the other kind of mistakes where you didn't invest in a company that turns out to be a big success. And, you know, so I'm not sure which one is worse, backing something that failed or missing something that went on to be a huge success. And there are a number of examples in my career of both. You know, there've been some failures, you know, notably after the dot-com crash of 2000, very early in my career, a lot of companies went under. I mean, it turned out that, you know, they were never going to generate the sort of revenue that we thought they would. And there was a sort of there was a massive mistake making at that point. You know, and then there've been a couple more instances of individual companies that for one reason or another just haven't worked out. And you do look back on those and think, well, what could I have done differently? And the one thing I'll say is, you know, it's always a mistake not to take action. You know, if it's a question of having to change aspects of the management team, should do it sooner rather than later, because turns out that the longer you wait to see how it goes, it just gets worse. So I think the lesson for me is take action early when there's a problem brewing. Don't try to avoid it, because it's probably not going to right itself. And that would be an important lesson, I think, for everyone to take note of.
Yeah, so don't ignore it. Take action straight away once you see it. Okay, perfect. And then do you see sort of similarities to the dot-com boom to what we're seeing at the moment?
Yeah, I do to some extent. One of the differences being, of course, that the sums of money involved this time around are so much greater. It's an interesting time. We've obviously learned a lot over the last 20 odd years since the dot-com crash. That was a time when we didn't really understand what the internet would be good for, useful for. In fact, many of the businesses that I remember looking at in the late 1990s, you know, ultimately turned out to be correct. I mean, the business models turned out to be right, and they identified the right things. They were just a decade too early before people had smartphones and could order things online super easy. And I think that is a little bit of a difference to now, because everyone's migrated their business, their shopping habits, their everything, even Zoom meetings, online. And I wonder actually if, you know, the last year we've been through with the global COVID pandemic is a step change in, you know, all of this. And maybe if we were heading for a correction before, maybe we're not now, because maybe there's so much momentum behind online businesses that it will continue. I also think that you know, we mustn't just focus on tech, because of course there's a whole other world out there of life sciences and engineering and sustainability and energy, and you know, I think there's a whole raft of new technologies coming through related to that. I think that the pandemic again has shone a light on the life sciences again, and infectious disease, which, to be honest, had been largely forgotten in the Western world. You know, in developed nations, disease was, you know, it was lifestyle diseases, it was diabetes, it was the influence of overweight. There was a focus on, you know, other conditions or diseases that were largely partly a result of lifestyle. And I think we've gone back to sort of, okay, well, infectious diseases can have a massive impact. And so I do wonder if there'll be a recalibration of, you know, looking at therapeutics, infectious diseases, vaccines, diagnostics, rapid testing. So I can imagine a whole surge of investment and innovation in that field. And someone recently asked me, you know, what do you think the pandemic's going to do to the venture capital industry? And I actually wonder if it's going to create a surge, because as many economies try to rebuild themselves after this, you know, it's going to rely on innovation and entrepreneurship to do so. And I think there'll be a whole generation of innovators and entrepreneurs who emerge during this time to bring new ways of doing things, both on a day-to-day level, you know, with the way we use technology, and on a therapeutic level with, you know, how we prepare for any future circumstances that are the same, because we've now seen what an impact this can have on society. So I do think this is a moment of, you know, big change, and entrepreneurs who spot opportunities within that may do very well, and subsequently the VC industry may find a lot of interesting new startups to back. So I think a sort of yes and no, I think, is the answer to your question. You've got to imagine sometimes that when you look at the stock market, it's quite high, and, you know, at some point, presumably that'll change. But right now, you've got to look at the need for innovation and think, well, perhaps there's a big push coming on here.
Yeah, perfect. Are you seeing that in maybe the pitches you're getting into for companies, that the change to more life sciences and maybe actually preventing these sort of diseases rather than actually treating them?
Yeah, I think we're certainly seeing a change in the, you know, in our portfolio companies, some of which have accelerated because they have particular business models related to this. So I think we will see a change.
Yeah, perfect. I did see one that was well, I think it was helping people, you know, going through challenging diseases, sort of similar to cancer and diabetes. I'm sure that's something, especially during COVID, that's seen a massive surge, because people just can't go to, you know, can't go to actually psychologists or hospitals.
Yeah, that's a business called Changing Health, and that is a kind of a you know, the initial focus of that business was on assisting people with diabetes remotely, and all sort of via your smartphone. So, you know, it's a platform for the management of chronic disease delivered through the smartphone, comprised of behavioral change, you know, in itself comprising of change in diet and exercise. And, you know, they have clinical data showing that their programs can reverse type 2 diabetes. And if you can do that with a chronic disease like diabetes, then you can apply that to other chronic diseases as well. And if you can apply that to a range of chronic diseases and deliver it remotely on a population level, then you have the possibility to influence the health of entire populations. And, you know, the health of the population is now top of the agenda, right? Because, you know, your resilience to certain diseases may be specifically related to how healthy your population is. So we've certainly seen an acceleration of interest in that company because nations are now interested in how they can maintain the health of the nation and therefore resilience to future pandemics or future disease.
Yeah, perfect. And as you said, those people are the most vulnerable to, especially with COVID and other potential infections. So yeah, it's very important. So you were talking about obviously countries having more involvement. Do you think maybe state-backed venture capital will benefit the market, or?
It's a mixed history. State intervention in venture capital it's always welcome, but it depends. Sometimes the state, and this goes across many countries, will create incentives for the venture capital industry to back a particular sector or a particular geography, a region. And sometimes the strings attached can sort of artificially influence the direction in which these things go. And we sometimes find that the venture capital industry is attempting to work within frameworks that are not particularly real. And sometimes it creates all sorts of problems and constraints and issues. You've obviously got to have constraints in there. I mean, if government's funding it, then government has to do that to meet its goals. But I think we have to keep it realistic. And there have been a few instances in the past where, state-backed injections of capital into the VC sector or incentives to back certain types of companies have created, the reverse incentive. And, VC funds have had to kind of step sideways or do things in a different way, and it doesn't quite deliver the desired outcome. So I think it's a really challenging area. It's always welcome, but governments really need to listen to the venture capital industry as to what will work and what won't work.
Yeah, I guess that's always the hardest part, actually, them listening to the experts. So I think you've already answered it before, but sort of my final question would be, where do you see venture capital going in the next 5 years? So I know you've...
Yeah, well, it's, I'm bound to be wrong here, aren't I? Whatever I say. I do think on the one hand, stock markets in the tech sector are at dizzying heights in some instances. So we've got to be a little cautious about that always. Make sure that the valuations reflect the fundamentals, and that's easier said than done. On the other hand, I do think now is a moment where there may well be a big surge in innovation, all addressing the challenges that have come to us via the pandemic. And as nations look to rebuild their economies, I think it's going to come from that direction. There'll be new business models, new technologies, new ways of doing things, and all of that provides, tremendous deal flow for the venture capital industry. If only we knew how to spot it, that would be perfect.
Yeah, perfect. And sorry, I'll have one more. Do you see sort of crowdfunding and retail maybe investors potentially being a threat to venture capital? Or?
I don't know if it's a threat. I mean, crowdfunding is there. It's obviously has grown in popularity through the use of the internet. The internet's a great platform for crowdfunding. I think there's a degree of caution that needs to be exercised here, certainly for investors, because there's a very large information asymmetry between investors who participate in crowdfunding and the entrepreneurs who are raising that money. And the venture capital industry, what it does is it does due diligence. It looks in detail at business models and the backgrounds of the business and the technology and what it does, and that's what we do. If you're a crowdfunder, it's really hard to do that because you can't be an expert in everything. And I think that investors should probably be quite cautious when they're backing early stage businesses. Often as not, they're going to fail. So you need to be prepared for that. And I do wonder sometimes if investors who move towards crowdfunding really appreciate that startups fail. And when they fail, you do stand the possibility of losing your investment. So be careful.
Yeah, perfect. I think, as you said before, that you might not see until you're actually in a board meeting, whereas a lot of crowdfunding investors will never actually see that. So
Exactly.
that there'll be that information. Okay, perfect. So Simon, thank you so much for joining us today. If someone wanted to contact you about an opportunity or anything like that, how would they be able to contact you?
Well, I think my email address is on the Warwick Business School website. That's probably the way to do it.
Okay, perfect. Thank you very much, Simon. Really appreciate it.
Thanks, Anthony.
Thank you very much for listening. I really hope you enjoyed. If you have any feedback on what we could do better, or if you know anyone who you think would be great guests, please write them down in the comments. Otherwise, thank you so much. Like, subscribe, and hope to see you in the next one. Cheers.